Welcome to another update from the DINAR Community channel, your trusted source for breaking insights into global currency movements, financial trends, and high-impact investment opportunities. Today, we shift our lens from the well-known Iraqi dinar IQD to a powerful emerging force, the Vietnamese Dong VND. Often dismissed in the past as a fringe currency with little international weight, the VND is now rapidly ascending as a key player in the evolving global economy. This isn't just about speculative buzz anymore, it's about fundamental transformation that's beginning to reshape how professionals and institutions approach foreign currency diversification. Make no mistake, what's happening in Vietnam right now is no minor regional event. This shift could redefine financial strategies from Wall Street to private wealth offices around the world. The Vietnamese Dong's reputation has transformed. Once seen as an inaccessible, non-convertible currency used only for local transactions, the VND is now entering serious financial discussions across investment circles, central bank forums, and institutional planning meetings. Why the change? It comes down to Vietnam's unprecedented economic surge, coupled with a carefully managed monetary policy. The State Bank of Vietnam (SBV) has tightened its grip on fiscal discipline, implementing a managed floating exchange system that has stabilized the dong within a controlled range of roughly 23,000–25,000 per USD. This strategy balances flexibility with protection, building international trust in the dong's reliability. Where once only USD, EUR, or JPY were considered safe harbors, more investors now view the Vietnamese dong as a smart asset for balancing and strengthening their portfolios. Economic strength backing a stronger currency. Vietnam's economic fundamentals are no longer just promising, they're exceptionally strong. Global financial organizations like the IMF and World Bank have raised Vietnam's 2025 growth projections, pointing to rapid gains in sectors like technology, electronics, manufacturing, and digital commerce. Vietnam has also become a magnet for foreign direct investment (FDI). Global brands are moving operations from China to Vietnam to capitalize on its skilled workforce, cost advantages, and strategic position in the global supply chain. These trends are fueling real and sustained demand for the dong. Trade surpluses, foreign reserve growth, and stronger capital inflows show that the currency is grounded in solid economic activity, not speculation. A new chapter in monetary strategy. In early 2025, the SBV raised its central reference rate, a modest move on the surface, but one that experts immediately understood as a signal of long-term confidence. It reflected belief in the dong's value and Vietnam's readiness to tackle inflation while supporting growth. Modernization has also been key. Vietnam is rapidly digitizing its banking and financial systems, from interbank transfers to regulatory oversight. This transformation is boosting investor confidence and giving the dong a reputation for being shock-resistant, stable, and increasingly relevant to both retail and institutional players. Fintech revolution is empowering the dong. Vietnam's digital economy is growing at breakneck speed. In just a few years, mobile banking, e-wallets, blockchain use, and fintech startups have redefined the country's financial landscape. More importantly, this isn't just happening in cities. Rural villages, small businesses, and farmers are using digital dong transactions daily. As blockchain-backed remittances, contactless payments, and peer-to-peer lending go mainstream, every transaction adds legitimacy to the VND as a currency built for the modern digital age. The dong is going global. VND's reach is no longer confined to Vietnam's borders. Across Southeast Asia, banks in Singapore, Malaysia, and Thailand are offering VND-based services. In the Middle East, Europe, and Australia, financial institutions are now including dong-denominated investment products and accounts in their offerings. Wealth managers are actively adding VND exposure to portfolios for high-net-worth clients seeking growth in emerging markets. Vietnam's integration into major trade agreements like the Regional Comprehensive Economic Partnership (RCEP) and deeper ties with the US, Japan, and the EU have made the dong more liquid and credible on the global stage. Foreign reserves break records, a foundation of strength. In 2025, Vietnam's foreign reserves topped $120 billion, a new all-time high. This huge safety net empowers the SBV to defend the currency against shocks, maintain macroeconomic stability, and reassure foreign investors. Rather than being vulnerable to sudden capital flight or currency crashes, a problem for many developing nations, Vietnam is now seen as a model of disciplined monetary management, capable of withstanding global volatility. Domestic confidence is soaring. Perhaps the most important transformation is happening inside Vietnam itself. For decades, citizens preferred to save in USD or buy gold. But now, confidence in the VND is surging. Real estate transactions, savings accounts, and government bond investments are increasingly done in the local currency. People are choosing to use the dong because they trust it, not because they're forced to. Education, modernization, and economic consistency have changed the public perception of their own currency. From cities to villages, inclusion is driving currency strength. Vietnam's financial revolution isn't just a capital city phenomenon. From Hanoi to small rural towns, digital infrastructure and fintech adoption are reaching everyone. Mobile apps let farmers manage savings, access loans, and build financial security. Fintech startups are helping small businesses thrive. Every rural dong transaction, no matter how small, strengthens the currency's place in the national and international economy. Blockchain and CBDC, future-proofing the dong. May 2025 marked a milestone. The SBV launched its pilot program for blockchain-based remittances, dramatically reducing fees and delays for money transfers from the Vietnamese diaspora. Simultaneously, the central bank began evaluating a central bank digital currency (CBDC), the digital dong. If successfully rolled out, Vietnam could become the first Asian country with a fully operational nationwide CBDC infrastructure. This bold vision for a scalable, digitally integrated economy could position the VND as the most innovative emerging market currency of the decade. The VND has graduated, it's no longer a speculative afterthought. International financial institutions are watching the dong closely. Investment firms are launching dong-linked funds, banks are facilitating VND transactions globally, and central banks are tracking its performance as a real reserve contender. Internally, trust in the dong is at an all-time high. Externally, the financial world now sees the VND as a serious currency with real potential, not hype. Final thoughts. A currency with a global future. The rise of the Vietnamese dong is no accident. It's the product of careful, long-term planning, fiscal discipline, legal reforms, digital innovation, and relentless focus on economic sustainability. Vietnam's monetary policy isn't chasing fast gains. It's building enduring credibility, paving the way for future convertibility and global acceptance. This is a once dismissed currency rewriting its narrative, from speculative footnote to strategic asset class. The Vietnamese dong isn't just emerging, it's accelerating toward global legitimacy, backed by structural strength and a visionary national roadmap. Like and subscribe for more videos.